Hello, my name is Mitch DeWitt, and I'm a financial advisor at Walkner Condon Financial Advisors. I'm also a CFP, Certified Financial Planner. And this is the second installment of a little video series here. Or I guess you could say it's the first. We did an intro series last time around, but this video is going to be a little bit more focused on a particular area of equity compensation. Again, equity compensation is something that you would receive from your employer as part of your compensation package, and it is in the form of various flavors of different employer stock. So the type that we're going to look at today are RSUs, restricted stock units. This is something that we see is more and more common nowadays. Back in the 90s, we'll say, when there was the tech boom, and think of Microsoft and some of those companies out west, they did a lot of stock options. We're seeing more the change towards RSUs. What is an RSU? RSU is something that is a unit, like in the name, a restricted stock unit, a unit of not really stock, but a future stock that will be delivered to you if you meet the certain vesting requirements. So you're granted these restricted stock units. It can show up in your account. And a lot of times you'll see it could be through E-Trade or Fidelity, and you'll see some sort of attached value to them. But then there might be a vested value and an unvested value. And when you vest, usually it's a function of time. So let's say over a 4-year period, you get vested in these RSUs. It then changes to the actual common stock, let's say, of the company that you're working for. And at that point in time, once the vesting occurs, is when you're taxed. So from a compensation perspective, when you are granted the RSUs, that means when you're given the stock with restriction, of course, or the stock units, I should say. Over that 4-year schedule, let's say it's 25% over 4 years, and it vests, you are taxed. After that, you then are holding the stock. And from there, the stock could go up, it could go down, you could sell it right away, you could hold it. The tax scenario changes greatly above and beyond that, of course, depending on how long you hold it, if you sell for a gain or a loss. And if you want to get into the weeds, call us, book a meeting, send me an email. But I think the basics of restricted stock units are you get granted these units. If you meet the vesting requirements, it turns into stock. Then you have an opportunity to buy or sell at that point in time, and there's going to be different tax ramifications along the way. We're seeing more and more of these restricted stock units. Be aware, they are different than restricted stock. So you can see restricted stock units, you can see restricted stocks. They're treated differently from a tax perspective, and then there's also special tax treatment that you might have on a restricted stock compared to a restricted stock unit. Something called the 83B election, which maybe we will do that and cover that area at a different time. If you work for a company in town that's publicly traded in the Madison, Wisconsin area, and maybe you're at a director level or part of your signing bonus was awarded an RSU grant, and you're just looking for some advice and strategy around what is the best way to handle this, please reach out to our firm, and we'd love to have a conversation with you.